The current cycle for oil is nearing its end, and we're preparing for a new impulse. So, in this video, I'm going to show you the targets for this move, as well as potential trades that might be possible. But most importantly, I want to keep you from making a potential mistake related to what seems like the most logical move, which is buying oil right now. Look, here's the thing: why I don't consider the current move an impulse, and why we won't go on to hit new highs. Let's start by analyzing everything from the previous move. This part here, if you break it down into its components, unfortunately, it's not an impulse. There's no five wave here. It's a full three wave of a complex model that's already finished. And actually, after that, we can even judge by the momentum how the growth occurred and the momentum of the subsequent move. So that same triangle I talked about in the last video now takes center stage. If you watched closely, you actually could have even made money on this. The current decline, which was the most recent, was exactly 62%, and then a bounce followed. But the thing is, the triangle structure itself implies movement in threes, meaning the current wave D isn't over yet. The bounce we're seeing now is also forming as a complex correction. And for Brent, its range is between 108 and $112 a barrel. So if you're thinking about going long because you expect oil to hit 130 or 150 soon, don't act until the price breaks 112.50. Essentially, that's the invalidation level, beyond which we'll be saying that a triangle is impossible here and the impulse is actually starting. Just a second, if you didn't know, trading is essentially all about working with probabilities. We build probabilities and scenarios that could play out, and if one of them is invalidated, we start working with another one and trading that instead. Well, right now, the triangle development scenario is the primary one. Therefore, from the 108 to 112.5 range, I expect the cycle to end in the next decline to begin, which will be move D. The structure itself looks like this. So, why exactly this range? It's not just the Fibonacci ratios we're looking at, but also the volume zone where the most trading activity has been concentrated lately. Actually, we won't break through it on the first try. And again, going back, if you think we're going to see growth, then we'll see consolidation right here. So, roughly speaking, if we see consolidation, I'll have time to flip my position to the other side and still go long along with you and the other participants. But for now, this is just an alternative scenario. So, if wave D starts to develop, we can also determine the target for this subsequent move. Actually, the minimum target's a new low. A new low has to happen within the triangle regardless. And that gives us a minimum target of 96. The main target will also be at the accumulation zone, which is 94.5. And so we end up with this narrow range, 94.50 to 96, the range where wave D should be completed. After that, I'm expecting another upward move. It'll be weak, but it could very well reach 107.5. And finally, a crash. This crash, if it happens, will be interesting. First, for selling oil, and second, for buying metals, because we've seen a very strong correlation between them lately, an asymmetric correlation. And so the potential trades here will be the most interesting because our target will be somewhere below 80. Everything we're seeing here, this triangle, looks like this from a higher time frame perspective. Globally, I still see the triangle as the main scenario, which is just missing the final wave E. And right now, we're actually right here in the middle of forming our wave B. So once we hit our target around 80 to finally complete that last wave E, that's when I'll be expecting some action in the Middle East. In terms of cycles, if we look at this whole trend, it should all happen only after the month of July. So I don't see any major moves happening before then. And so if we look at the whole picture, after the drop to 80, our targets will be moves. Not just to 130, but to 160 and $200 per barrel. So let's wrap this up. What trades can we make and what's our plan here? We should look for reversal signals and patterns in the 108 to 112 range. If we see consolidation in this zone, we'll prioritize buy-in and look for a new high. If a reversal pattern appears, we'll target 95, or more precisely, 94 and a half. But this move won't be the end of it. The triangle will keep developing with a retest of 107 and a half. And that's where a major trade awaits us, which will be on a market crash and oil market crash, allowing us to drop to 80 and complete the entire model we've been looking at here and start that very oil and energy crisis that the whole world is waiting for. That's all. If you want more ideas, subscribe to the Telegram channel below this video. Come, take them, and earn with me. Bye.